This episode is brought to you by Micro Focus. To learn more about accelerating mainframe migration and building agility, stay tuned at the end of this episode.
Hello and welcome to another episode of the iTnews podcast. On the show this week, we have Paul Moss, the General Manager of Technology, Operations and Product at MyState Limited. MyState's banking and wealth management roots are in Tasmania, but it now also has significant mainland reach that it increasingly serves digitally. It is also forging ahead with a significant and expansive program of digital and technology works that is attached to a broader growth strategy that will see it through to the end of FY25. We hope you enjoy the conversation. It might be worth just starting with a brief overview of MyState, particularly with your role and the span and size of the technology operations.
MyState Limited consists of MyState Bank, and we've also got TPT Wealth, our wealth management business. We're a proud Tasmanian organisation. TPT has been around for many a year, 134 years old, one of the oldest providers of trustee solutions in Australia. As for the bank, really what we're here to talk about today, we're certainly a leading challenger digital bank. We've got over 160,000 customers. We grew our loan book to over $6 billion last year, and a bank, frankly, with a really strong appetite for growth. In terms of what we are, if I look back at our history, we formed out of the credit union space many years ago. Credit unions obviously a huge focus on customers, and very pleased to say that same sentiment applies to the bank today, with MyState as a listed bank. And of course, with those customers, not just in Tassie, increasingly up and down the length of the eastern seaboard. So I've been with the bank almost 7 years, very fortunate to have overseen much of the digital transformation work that we've undertaken in that time. We've consolidated multiple core banking systems. We've introduced a new CRM. We've introduced digital origination for our products across the board. And of course, much work in the payment space, real-time payments with Osco, the Pays, Apple Pay, Fitbit Pay, Garmin Pay, all of the Pays. And then more recently, open banking, which is something that we're really excited about. Size-wise, we're a relatively small bank, around 360 FTE. A quarter of those work in my own division. I'm responsible for technology, operations and product. It should probably begin with product, but I was told that top sounds better than pot. But responsible for, as the title suggests, product in as much of designing the product, conceiving the product, working out what customers want. In technology, building it, delivering it, hosting it, managing it. And then in operations, administering the product and dealing with customers. So it's a very good role to have, I must say, really from the point of view of having such a close contact with customers, even though they may sound like back-end teams. Frankly, if something can go wrong, it's either a product thing, a technology thing, or an operations thing. So we enjoy really close contact with our customers. So great place to work, great culture, never resting. An organisation that really leans into its values, and headquartered in Tassie. Again, a beautiful part to live. I moved over here from the UK in 2006 for 12 months and I haven't been back. And despite being in Tassie, we've got a really great multicultural team. I think last time I checked, we've got 9 countries represented in technology alone. So a really good place to be.
It's interesting you mentioned the structure there, because there's a lot of movement, I think, within technology at the moment to align technology under operations, firstly, but also to align it to product delivery as well. It's interesting that you have that structure. How long have you had that structure or the remit with all three of those coming together?
I've had that for most of my time at MyState. Previous roles, I've had technology and operations, and product management has been dealt with separately. I find, frankly, having all three somewhat selfishly is a really good thing, because you've got control of those resources. It certainly gives you, frankly, no excuses to get things done quickly. And the relationships between those teams, relationships which necessarily need to be so effective and so nimble, having them report into the same GM, into the same function, I find is of great value. So I've had that for, I think, 6 of my 7 years. And then obviously great relationships with distribution. We're nothing without distribution. We're nothing without marketing. And we enjoy those relationships also.
And just structurally, how does that work in terms of the way that products are developed and how technology or operations is input into that product development and delivery process?
It's a cliche, but it's a cliche I'll certainly state. We are customer focused. It does sound like a terrible cliche, but it is first and foremost about the customer. We like to keep things simple. It's a rule that we really live by. So simple to build, simple products, easy to understand, simple to build, simple to administer. And moreover, simple for our customers to understand. So when I joined the bank, we had many products. We had versions of products. We had versions of products. And we've spent quite some time actually consolidating. So we've got a saving account, we've got a transaction account, and we've got a few other smaller things, but really our portfolio is simple. Staff have appreciated that. So if somebody comes in for a home loan or a term deposit, it's easy to talk to the customer about those products. The product guys get out there and listen to those conversations. We spend a lot of time looking domestically, but also overseas. We certainly find in the Northern Hemisphere, there's quite a bit of influence that we can draw upon there. So simplicity is key, and also on productivity as well, perhaps more of an internal measure, but simplicity is what we live by, and bringing and drawing the customer voice into the decisions that we make.
And it sounds like from what you were saying just earlier around the consolidation of core systems and the establishment of some other major IT components, that the simplicity strategy also rolls to the back end as well in terms of the strategy that you've taken there.
It does. We've got a comparatively simple technology stack. I mentioned the consolidation of the core. That was something that was really important. We had a different brand when I joined the bank. We are now one brand, but we have one brand with two cores. So the consolidation of that was really important. We have got a very simple stack, and by goodness, we do that by design. It certainly makes for much more straightforward management of systems, more straightforward deployment of systems, and it's something that we really aspire to. One of the key investments we've made in recent times, probably being 5 years ago now, was the enterprise service bus. Core banking systems are not always renowned for being the most interoperable of systems. So the introduction of the enterprise service bus really allowed us to abstract from the core, so to speak, and have a much more contemporary way of interacting with that core programmatically. So it certainly meant in recent times the introduction of third-party applications, digital solutions with the core has been much more straightforward.
Can you give us an idea at a high level of MyState's technology strategies in terms of the key pillars, what period of time you're forecasting or working towards, and what investments are being made over that period?
By all means, the pillars I suspect will be very familiar to many. Digital first and foremost, payments and lending, and of course underpinned by cyber, by data governance, by risk management. The organisational strategy for the group stretches to FY25. It's really focused on substantial growth. So from that leads, in terms of technology, it's twofold. It's keeping up with the scale. We're growing at a huge rate at the moment, at a rate that we are confident is going to accelerate. So keeping up with scale, and also, of course, building new solutions to attract new customers. So increasingly, we're looking to the Eastern Seaboard, looking interstate, looking to attract new customers for the bank, customers, of course, who will engage only via digital solutions. We've come from being to a reasonable extent, a branch-based bank, and certainly in the yesteryear of the credit unions, of being a person-to-person organisation, moving to digital, attracting those customers into state. As I said, it leads to scale. So in the case of digital transformation, no surprises. We began that many years ago. It'll certainly never be finished. As our CEO used to say, it's like painting the Sydney Harbour Bridge, and it certainly feels that way. But with so many new options coming to the market, we've got a strong programme of investment for digital. We're launching this calendar year our new internet and mobile app. A lot of people working on that as I speak. Payments, another stream, another pillar. Certainly a fast-moving space. We're seeing more and more uptake of things like the new payments platform, or OSCO, for instant payments. We launched that a couple of years ago, but the usage of that is certainly on the increase. We've got the NPP Pay 2 capability launching this year. So again, more utility being added to the new payments platform. We're also looking at the market more broadly. We're curious about the buy now, pay later options. There's a few options in that space. Again, we're not in a position to build, but certainly there are quite a few partners now coming to the market offering things like that. So we're watching that space with interest, and certainly expect payments for some time to be a very fast-moving space. Another pillar is lending. My goodness, a really competitive market at the moment. We are a lender. We are out there aggressively looking for lending business, and we've certainly grown massively in the time I've been with the bank. I think underlining that, when I joined, I think 85% of our loan book was based in Tassie. We were a Tasmanian-focused organisation. As I sit here today, it's less than 40%. So we've got a large number of customers that we only interact with digitally, and of course that needs to apply to loans as well. So we deal a lot with third-party lending with brokers. And what do customers want? What do brokers want? They want rapid approval of loans. Auto approval of loans is our target state, but also wrapping in the inevitable responsible lending, which we take very seriously and do it right. And looking for auto decisioning in a way that gives brokers and customers the answer they want quickly, but also recognising that a quick no is often as good as a quick yes. We see the headlines, all of us, about auto unconditional approval in seconds, but frankly, when you peek behind the covers, it's often of little substance. But things are changing with open banking launching quite recently, and we're a certified data holder compliant with open banking. With those data sources now becoming more ubiquitous, I would suspect loan approvals and loan assessment and the ability to enrich that decision making with data will only improve. So digital payments lending are really the three pillars. It would be risk perhaps not to mention cyber. Cyber investments, again, are almost continuous. We welcomed the organisation a new head of data and information security in recent weeks, really underlining our strategic intent for growth and realising the use of data in that, but also coinciding with the effective management of cyber as well. It's incredibly important that remains integral to everything we do.
I feel like we should talk about the lending pillar specifically. MyState saw strong loan book growth through particularly last year, and that was in part credited to extensive investments in people and also into the digital back-end processes. And I know you've sort of touched on some of those digital back-end processes, but I feel like it might be worth talking through some of the technology aspects at play here. I suspect maybe we're thinking things like straight-through processing. We're looking at things like process optimization or even some sort of process automation. But maybe you can give us a sense of what you're looking at to get to that sort of end state of auto approval or near auto approval.
By all means, look, I think it's another good example of the advantage, frankly, of having both technology and operations in my remit. You find technology people, not always, but quite often think differently to operations people. Operations people are invariably closer to the customer. Technology invariably are familiar au fait with solutions out there. And I find the two things combine very well. Perhaps one of the most significant impacts has been robotics, robotic process automation. We've been strong advocates for that for some time. We were perhaps a late starter. The cost of entry for the technology until probably, 3 years ago was somewhat prohibitive. But when it became much less prohibitive, we were a very fast follower. We've made great strides in RPA in recent times. We've got, last time I checked a few days ago, 40 processes running in the business. So 3 robots. They are named. I'll spare you the names, but we do treat them like human employees. As my head of operations at one time cruelly remarked, they're the dumbest employees we've ever hired. It was actually a good way of describing it because it really taught us to understand these robots will do what you tell them to do. And that's fine, provided you are utterly rigorous and scrupulous about telling them what they need to do. And that's been a great learning process for us. In the lending space, what's that translated to? It's simple things in part. So when we unconditionally approve a loan, we send an email to a broker. That was for many a time a manual process, and now the bot does it. So the bots are logging into the loan origination systems. They're looking for approved loans, and the minute one does get unconditionally approved, it grabs it, sends the email, sends all of the requisite documents to the broker. It means things can happen around the clock. And moreover, it means things aren't forgotten either. So certainly at times when we were incredibly busy, it was things like that, previously a manual task, which could sometimes fail to happen. One other thing is loan documentation. So again, we've approved a loan. How do we provide the loan documentation? We deal with a third party to provide the loan docs to customers for them to sign. That same third party also deals with settlements. And so we were approving a loan and then writing up a Word document with the details of the loan to then email to the third party for them to produce the docs. Today, our robot is talking to their robot. So one of our bots logs in, looks for the approved loans, again, grabs the details, jumps online, connects to the robot at the third party and said, here are the details of the loan. That process probably saves 25 minutes per loan. If we're doing 100 loans a day, then the time saving is significant. And so robotics has been about really smoothing out the process, but also quite significantly about saving time as well. So in order for us to maintain the highly personalized touch that we enjoy with our customers, and of course, brokers are our customers as well, the more time we can spend engaging with those brokers, engaging with those customers, working out the sort of deals or the sort of applications that the broker is endeavoring to do, the more time we can spend doing that, the better off we are as a business. And if the robots can take care of the grind work behind the scenes, then so much the better. Robotics, look, it's fair to say it's an entire discussion in its own right. As I said, we've learned a great deal. I mentioned they are the dumbest employees. And What I mean by that is it's very easy to say to a human operator, tell me how you do this task. And they'll list all the things that they do. And then we train the robot to do it. It's often very quick to do that, probably within 24 hours. And then the robot is set off under the watchful eye of the human operator. And an hour into the job, it'll say, I don't know what to do. And the human operator will say, if that happens, you need to do ABC. And then, of course, we go away and tell the robot to do ABC when this particular scenario arises. And it's taught us that people know how they do their job. They know how they do tasks, but a significant percentage of what they do is done almost subconsciously. And so being rigorous in really drawing out each nuance of every process and making sure the robots are performing is incredibly important. The other thing we found at a very early stage, and frankly to our cost, that when you rely on the robots to do a process, if the robot is suddenly sick, or in this case broken, then you need a human operator to step in, much like a human colleague is off sick and one of their colleagues steps in to pick up the reins for a few days. So it's important that you've got people in the organisation who can actually remember how to do the process. So robotics, look, it's a great thing. We are thriving with robotics at the moment, but for anybody embarking on that journey, just take time, treat them as human operators, and that analogy has served us really well over time.
To some of those edge cases that you mentioned in terms of needing the human to intervene, have they gradually declined? And is that just a natural part of being on this robotics journey? Or is that to do with some of the technology and the technology's ability to learn from encountering those errors, for example? There's a lot of different layers to robotics and the robotics market these days.
There's a few different ways to answer that. Certainly, as I said, the journey of understanding and unearthing every nuance of every process does take time. Human operators, they may encounter an exception to a process maybe once a quarter. And so when they're asked to document the way they do things, they may not recall that particular nuance. So we have what we call performance reviews for the bots. Again, relating it to the analogy of a human operator, the bots will send an end-of-day report to their manager. This is what I've done today, accompanied by this is what I couldn't do today. And so if there are 100 repetitive things to do in a day, we would find that when the robot is first set to work, it might do 30 of the 100. And then we find out to do the other 70, which have been since passed to a human, it needs to learn another task. And so we teach it the other task, and then the next day it does 50, and then the process repeats. So we have what we call a hypercare process. When bots are first deployed, they're actually done in a fashion that the human operator, previously responsible for the task, has visual oversight of what the robot is doing. That period will pass when we're satisfied that, like a human, again, the robot is effectively trained and is competent in the role. And then we have quarterly performance reviews looking at how the robot's performed. Is there any training that we can provide, and can we augment the task? One of the other things we found with robotics is blindly always replicating what a human does is not always the way things could be done. So on occasion, we've set about replicating what a human does, but actually worked out quite quickly often that actually system-to-system integration is a much more effective way of doing it. So if I had $1 for every time someone in the organisation says, can we get a robot to do X, Y, Z, I'd probably be living in the Bahamas. But it tells me two things. It tells me we're fortunate that there's a great appreciation for the bots. I won't tell you there wasn't a small amount of anxiety when they were introduced. Anxiety of the bots are here to take over, etc., etc. But there's a real appreciation now that the bots are sitting alongside their human counterparts and doing that work. As the bots become more trained, to your question before, as they become more familiar with each system. So they're familiar now with our core banking system. They're familiar with our loan origination systems. As we expand their skill, they become more equipped effectively to do their job and more familiar with the systems that we've got. Then the breadth of the processes that we can apply their little robot brains to increases very quickly.
I'm also interested in how the bank runs or operates from an architecture perspective, whether you're mostly in the cloud or on-prem, or we've talked a little bit about some of the enterprise applications, but it'd be useful to understand a bit about the application stack or the application environment at a high level as well.
By all means. So look, for many years, we managed, I guess, a typical environment. We were mostly on premise. That soon moved to largely infrastructure as a service, where we're managing the operating system and above. We're buying servers and installing RAM, and someone else is looking after the tin and we're looking after the software. So very familiar to many, I'm sure. Wind forward to today, we've got a really genuinely hybrid environment. We've got hardly any on-premise infrastructure anymore. We've got a little bit of necessary local LAN infrastructure, network infrastructure. But if I look at our architecture diagrams today, we've got substantial third-party hosting. Third party in as much that we procure an application, we're actually procuring the hosting of that as well. And so really a one-stop shop in that regard of looking after the equipment, looking after the software, looking after patching and updates, etc. We've got a little bit of private hosting, certainly for our core banking system, a system which is, I guess, relatively niche and certainly very specialized. And then increasingly cloud hosting. We're moving more and more compute to the cloud. We're in the midst of moving our commodity Intel-based services to the cloud. And of course, over that journey, the skills required are changing. So as I said, we're not buying servers anymore. We're not adding RAM. We're not changing tapes. We're dealing with a sizable Microsoft Azure estate. We're dealing with multiple suppliers. We're dealing with contract management. And of course, those skills are very different. So certainly mindful of that when dealing with our staff. Numbers wise, I mentioned before, we're a relatively small bank and we enjoy a very simple technology stack. Simple also in terms of numbers. We've got around 20 business applications. That comprises around 50 pieces of software to provide those aforementioned 20 apps and only 200 servers, which for much larger organizations is a drop in the ocean. In terms of the systems themselves, we enjoy core banking systems from TCS banks. We have loan origination from Sandstone Lendfast, Sandstone based over in North Sydney. On the digital front, we use Temenos, so launching the Temenos digital application this year. And then elsewhere, perhaps a more familiar set of apps, the Microsoft Suite, both for corporate and also CRM. Payments, we use Cuscal, so the Cuscal Payments Gateway, leveraging their own investments in really keeping up with contemporary payment solutions. Elsewhere, IBM middleware, and I've spoken about robotics at length. We use UiPath for robotics. We looked at a few different toolkits at the time, and it's sort of Ford versus Holden, I guess, in many ways, but we've been delighted with UiPath and both the software, both the power it provides us with, and also, frankly, the input and the value add from UiPath themselves. They've been really supportive of our journey so far. So look at certainly a hybrid architecture. It really leaves us in a position of being a systems integrator. So if I think about our digital solutions, we've often got 5 suppliers, 5 systems, all adding up to provide a digital solution. And so we sit in the middle playing that systems integrator role, managing our enterprise service bus, which interconnects these systems. We have challenges, of course, challenges that we've had to overcome over time, understanding those third parties, understanding the risks as they pertain to those third party. How do we manage those third parties? How do we undertake risk assessments of those third parties? What are they doing with our data? Are we sending data that we should to those third parties? Is that data protected? Fair to say, and it's perhaps obvious, but such an important point, when data is on premise, if anybody asks you where is the data, you can actually physically point to it. But when you're dealing with multiple third parties in multiple different cloud environments, the ability and the importance of being able to answer that question is incredibly important. Monitoring is also really important. So if we have a system slowdown or a system outage, again, there are so many component pieces in any modern architecture today. Where is that bottleneck? Where is that outage? Which part of the architecture is that taking place in? And so focusing on monitoring has been really important. Network latency, I won't get too technical, but we've all heard of ping times. So what's the speed of connection, if you like, between system A and system B? And when you find system A and system B are suddenly many thousands of kilometers apart from one another, then what is that network latency? Of course, customers want speed. They want a rapid response to their request. If you've got 5 systems in different parts of the world, or certainly domestically, different parts of Australia, all needing to connect to one another, what we call a ping radius, the sum total of all of those parts of the network can add up. And if you're not careful, then the speed of response to that customer can slow down. So we spend a lot of time looking at that. Network latency between sites, redundancy between sites, all really important to make sure applications are readily available, highly available, and perform in a manner that customers expect.
Yeah, absolutely. Really important within a digital transformation context. Something you just mentioned just before then was around the skills. And I think it'd be remiss if we didn't talk a little bit about recruitment, common challenge across tech teams, really common challenge across a lot of industries right now. And I just wondered, with the shift to remote work, have you altered the way that you approach the search for technology skills?
I wouldn't say we've changed the approach, but I would certainly concur. It's certainly brought about challenges. We were somewhat fortunate. The way we provide corporate desktop technology to the organisation has meant remote working was immediately available in the box, so to speak. And so The move to working from home arrangements, remote arrangements, came about very quickly when COVID dawned early in 2020. That was a great thing, provided huge flexibility for the organisation. Flexibility, I think it's fair to say early on, we probably didn't readily appreciate. It was the flexibility of the staff that we had, not necessarily the staff that we were seeking. Certainly the last 18 months or so, we've readily recruited people from across Australia who are working from home. I've got, I think, 6 people in the underwriting team assessing loans who are not in Tassie. We've got people in Adelaide, we've got people in Sydney, in Victoria, at one time a couple of people in WA. And the remote working has been a huge boon in that regard.
And just as a final question, what excites you about 2022? And I know you've mentioned a couple of things that are coming up in the pipeline around open banking, around the Temenos digital side, but I'm really interested in your perspective, what excites you about this year and maybe even beyond?
Yeah, sure. Look, it's a good question. It's probably twofold. At a high level, we're pursuing our FY25 strategy. So topics that I've mentioned in our chat today around growth. Growth is never ending. We've got huge ambition in that regard. So a huge focus necessarily on that FY25 strategy. That's underpinned by a significant program of work. So as you might imagine, across technology, operations and products, and I have the process improvement team as well, a lot of the work we're doing is dependent on those teams. So what excites me? Look, it's a great program of work. The things that excite me, frankly, are solving problems, working out solutions, working across the business, both within my own division and across the business to solve those problems, come up with innovative ways of solving problems for customers, looking what our counterparts are doing, looking further afield, bringing in this contemporary comparison, better ways of doing things, becoming more productive. Open banking, certainly. As I said, we're an accredited data holder. We would stand at some stage to be an accredited data recipient. So drawing in data for our customers, providing more value for our customers, providing more insights into their own banking activity, whether it's with MyState or whether it's with a third party. So that's something that we're looking at in earnest. Otherwise, coming back to the repeated theme of growth, we've got big dreams. So we've launched most recently a new marketing campaign interstate, the Numbers and Feelings campaign. So some listeners may have seen it, certainly in Victoria. It's on trams, it's on the TV, it's on billboards. And with that is coming customer growth, and we need to be able to scale to deliver on that. So I think it's fair to say any organisation which is growing at the rate that MyState is a great place to be. Great place because there's so much energy, and as the saying goes, energy is eternal delight. So a very energetic organisation, a very energetic team, and a team which is enjoying solving, frankly, some sometimes difficult problems to try and keep up with that growth, but really enjoying the process in the meantime.
Hi, I'm Brad Howarth for iTnews. Today's IT leaders face enormous pressure to help their organisations respond faster to the changes that are happening around them. For many, however, their ambitions are constrained by the IT systems they operate, and getting from where they are to where they want to be can be a significant challenge. For more than 40 years, Micro Focus has been helping clients get more out of their mainframe environments. As Regional Sales Director Brett Butchard explains, today Micro Focus is helping those clients bridge the gap between their current and future states, and doing so in a way that delivers the benefits of a hybrid cloud much faster than many leaders might have believed. Brent, how have the pressures on IT leaders changed in recent years?
The pressures on IT leaders have changed demonstrably in the last few years. Digital transformation. It's requiring them to be a new type of leader. Rising cost pressures, rapid responding to new challenges, competitive pressures. It's requiring them to transform their core and their customer-facing systems at the same time. They need to move from being a technology leader to someone helping the business re-envisage how they can execute.
How important is agility to them now?
Agility is massively important. We all are facing workforce cost and the gap between supply and demand. No longer can we just throw money at a problem. We need to execute far better with the limited resources and assets that are available to us.
Okay, so how is this impacting the way they're thinking about their mainframe environments?
There's been demonstrable impact on mainframe migration over the last few years. 5 years ago, it was around moving to the cloud, rewriting a new application in a 5 to 7 year horizon. Now there's an expectation that we'll be in a hybrid world in the near term, and the business are realizing that they need to move their technology closer to be agile and leverage new capabilities. This requires results to the business annually, not at the end of a project.
So what do they want from their new cloud environments?
Customers want from their new cloud environments agility and new capability. Let's look at what's unique and hard to replicate in the banking insurance sector. One, it's their balance sheet. Two, it's their customer data. Their ability to leverage vast amounts of information on customers is paramount to improving unique customer engagements. This is not a weekly ETL. This is not an analytical pass over the mainframe. This is the migration of mainframe applications closer to the analysis point. This is going to improve processes and allow them to integrate native AI and analytics into their core applications. Overall, this is how we re-envisage how a business operates. The customer data is the gold that will allow them to have unique interactions with their customers and improve their products and services over time ahead of the competition. The inability to leverage this customer data and help it improve the business processes is what's holding them back. So they need to access this. Bringing the mainframe applications into the cloud brings the data closest to the analysis point in a native environment. We're talking about AI and analytics from the cloud directly integrated into their core systems, not wrapped around like a layer of sticky tape.
What techniques are they embracing to get the most out of migration?
If we look back 5 years ago, customers were looking at a one-size-fits-all approach. Do I rehost? Do I re-architect? Do I rewrite? Or do I retire? Now they're understanding that there are multiple paths to success. And what customers are looking to do is how do they accelerate the move to new architectures to get the speed and flexibility or the majority of it in a cost-effective format. So it may be 3 or 4 jumps that you take to get to the end, but the overall journey has been accelerated by prioritizing where you're going to get the best benefits. This is not to negate an eventual rewrite or a move to a new application, but how do they demonstrate to the businesses that through a multifaceted approach, there can be demonstrable benefits up front, so there can be returns to the business throughout the project timeline in year 1 through to year 5.
So what are you bringing to the table to help with these new requirements?
What Micro Focus brings to the table is old and new. It's 40 years of experience and 1,000 migrations. But we've evolved as an organisation as the requirements of customers and the industry has changed. Significant R&D into the new technology. So this is not just migrating to have another mainframe. This is to evolve the application. That means we've matured as the market has matured as well. On top of that, we bring an ecosystem. Partners such as Deloitte, HPE, Accenture, Wipro, Infosys, and TCS. Bring that with in-country successful migrations on APRA-regulated platforms, transportation and government. We have skills in the market. We have an understanding of where it's going. And this is not just about a re-platform. This is around how do we help a company re-envisage how they execute their business underpinned through digital transformation.
That was Brett Butchard, Regional Sales Director for Micro Focus, talking about accelerating the benefits of mainframe migration. For more information, visit www.microfocus.com.
And that's the podcast for this week. We'll be back with an exciting new interview next week. Until then, you can catch all the latest headlines in Australian IT over at itnews.com.au.